Good morning, guys. Brian's here. Today is Monday, December 18th, 2023. It's pre-market, and this is the weekly recap video as well as the upcoming week's analysis using the gamma exposure levels. So as always, I like to start with the previous week, and you guys can see right here how plotting these gamma exposure levels continue to assist in trading decisions as well as keep us out of trouble, regardless of what your bias is or what you think the market was going to do in advance. At the start of last week, you guys can see this is where a lot of the absolute gamma levels was. This is where the negative gamma was. This is where a lot of the high open interest levels were. And once the market maintains holding above those levels, once we start getting above these positive gamma strikes, regardless of what you think is going to happen, as long as they are holding these levels, it's very difficult to have some sort of a bearish bias. This week on Wednesday was the FOMC announcement. So as expected, we discussed this in the last couple previous videos, expecting a large move this week. We ended up getting a really nice move, but as you guys can see, it struggled to hold above 470. This is where the positive gamma exposure rolled off. If you're new to this channel, this is how I approach my weekly analysis, and this is how I kind of map out some of my plans for the week. This was the start of last week. These are the levels right here. Again, before the price action happens, it's all based on this gamma analysis charts right here that's generated using quant trading app. 470 is a certain level in which the gamma exposure rolls off. So the expectation would be that if the SPX was to get higher than this level on the SPY, it's going to be very difficult for it to remain that high unless we start seeing something changing in the gamma exposure or price action tells us otherwise. In this case here, momentum carried the SPY higher, but then we started to form a downtrend here on Thursday, and ultimately again by Friday the market was choppy around the 470 level, as this was our high gamma exposure strike. On top of that, at the start of this week, if you're looking for some sort of a short trade, it doesn't make that much sense to short into all of this potential support and all of this potential demand. Price action will be very choppy in a region like this, unless of course we gapped below this region or there was some major catalyst that happened throughout the day that would have caused price action to look like this, except in the opposite direction, so straight down, and then it consolidated below here. Then it would be a little bit smarter to have some sort of a bearish bias, because the price action would have cleared all of this high liquidity area. The blue area is the high open interest levels, and then we have these absolute gamma strikes, the negative gamma strikes, and we have the gamma flip strike. If this is your first time checking out this video, I highly recommend some of the videos. I will post it in the description down below, or you can just check out the playlist in which I've been sharing these types of videos all year long. But for the most part, this was last week's review. Let's just jump straight into this upcoming week right here, since we only have about 10 minutes before the market opens. As usual, I like to start by looking at the calendar for the week to see if there's any major catalysts. So we have this Tuesday pre-market. In my opinion, I don't really pay that much attention to it. It's not that significant. On Wednesday, we have the consumer confidence. This one tends to have a little bit more weight on the market, and then we have the GDP and jobless claims pre-market Thursday, and then Friday we have a few other catalysts here spanning from pre-market all the way up until 10 a.m. So nothing that significant. For me, the major ones that I pay attention to are anything pertaining to the Fed. So if they're Fed speaking, if it's FOMC announcements, if it's a CPI, anything pertaining to inflation, the Feds are usually my priorities. These I tend not to let them deter me from taking some sort of overnight swing trade or so. Next, moving right along, let's take a look at the gamma exposure for the entire SPY chain here. This is all expirations selected. Let's scroll down and see if we see anything significant. So we can still see there's still a lot of speculation occurring to the call side, with 475 being the highest positive gamma strike, and we can see a lot of interest at 480, as this is letting us know this is the highest call open interest strike, again collectively across all expirations. If we scroll down, we can see that this is our gamma flip, and this is our highest negative gamma strike. So this area I would expect to be some sort of support here in this region. So this is again starting from the larger time frame overall. The absolute gamma strike is just about 470, so right where the SPY is essentially trading right now. If we turn off the net GEX, we just want to see if there's anything interesting. We can still see that there is absolute gamma that is increasing to the upside, so that's something I will just mark. In other words, as long as we remain above 470, if I'm just taking a look at this and trying to summarize this, as long as price remains above 470, there is a high likelihood and there's still a lot of interest or speculation, assuming that the SPY is going to go to 475. So in other words, the SPY has to be below 470 before I'm even willing to consider taking some sort of a significant short trade. And a lot of the times whenever I'm talking about these types of trades, I don't necessarily mean a scalp. If you want to scalp a trade here and there, you know, in this case here, take for example on Wednesday when the SPY hit 465, let's just say you want to retrace, you know, take a day trade and scalp it back down to the opening print. As we see right here, this is where the SPY opened. It ended up going up. kind of rejected around 465, and then it retraced back to the opening print. That is a day trade. It's a scalp. It's not the type of trade in which I'm interested in. I generally look for larger trades, and when I'm talking about a directional trade, I'm usually considering some sort of a swing trade, and I'm looking for something more along the lines of a 2% move for the direction for the SPY. So in other words, if I was looking to enter a short trade, a serious drop would be something around here for me. So this is about a 2% move. So that's about 10 points or so on the SPY is generally what I'm going to be aiming for. 5 to 10 points. Less than that, it's not as significant. I will run 0 DTE credit spreads here and there, but for the most part, I just wanted to clarify that when you guys are looking at a video like this and you see some sort of technical pattern that's forming on your chart, it doesn't necessarily mean you don't need to take the trade, but I'm coming from a standpoint in which I'm saying it's not necessarily an A+ trade that fits my playbook or my style of trading. However, there are little micro opportunities in between here and there. I actually did take a trade. That was a short trade on Friday where I shorted some calls, and the trade only lasted about an hour and a half or so, and it was about a 75% return on credit. So yes, I did take a short trade on Friday. For myself, actually, we'll be recording a video discussing it. I recorded one, but I figured I can record a shorter, more concise version, and I'll hopefully get that video up to you guys later this week, as I intend to share more 0 DTE credit spreads next year. All right, so moving right along now, let's jump to this week's analysis. So all we're doing is we're deselecting all of the expirations, and we're just choosing just this upcoming week to kind of get a roadmap or a blueprint for this upcoming week. So we start from the top here. We can see things are pretty balanced for this week. Whenever I see that, it means there's not really much directional bias or either side. From an options premium standpoint, this is more normal for the market. In other words, when we see this, it means there are a lot of calls that are still deep in the money. So I will not be surprised. If you care about my 2 cents, I'm expecting some sort of a retracement in the markets, maybe a 4 to 5% pullback in January. That is only something I will expect if the market continues to remain at the highs for the end of this year. If we get the pullback before the year is up, it in a sense invalidates my thesis for January. So I'm kind of hoping this remains in balance. I'm also hoping that the market does not have some sort of a 3 to 5% correction this month. There's only 2 more weeks left in the month. So I'm hoping it stays there, because then I would expect this to kind of balance out by the end of January. So I'll be looking into something like February puts or so. That's my own personal statement, but for the most part, this week right now, things are pretty balanced right here. As we scroll down, we can see how this looks. So this is actually a different gamma exposure profile that we've seen in the past. Things look a little bit more balanced, if you'll say, and we can kind of see it right here. If this is the current spot price, it's currently trading around 471. The last traded price is 470.83 when this was aggregated at 9:11 Eastern time here. But as we can see, this is the highest positive gamma strike. This is the highest negative gamma strike. So this is pretty tight. So I wouldn't really expect there to be much volatility this week, unless, of course, the SPY was to get below this level right here. This is our gamma flip. Below here, anything can happen. So this is, in a sense, our support. This is, in a sense, potential resistance here. This is where the bulk of all the open interest is. So we're only looking about a 1% move up. And then down here, we're looking at less than a 1% move down. So I'm just going to stretch it out right here, and might as well consider this to be some sort of a range for the week. Again, this is just one data point. This is just looking at the gamma exposure profile for the week. This is by no means the only way to analyze the market. It's just something that I like to do, so then I have these levels on my charts and they can help keep me out of trouble, because during the week things will change, but at least I know at the start of the week this is what the options profile looks like from a gamma exposure perspective. So let me just clear my chart right now, and then we'll plot these levels very quickly. The first thing I do every time, come here and then clear the drawing set. So I like to start with a completely fresh drawing set, and then we just start plotting these bubbles on our chart. So 475, keep it pretty simple. 475, come right up here. I always like to plot it at the start so it extends to the right. So it's not looking into the past, it's looking forward, and make these levels pretty thick here. Make it a solid level because it is a dominant strike. It is the P1 strike. Boom. Have that on our chart. Make sure I have the labels turned on to the right. Press OK. Next, let's go to P1. 4, 6, 8. Let's duplicate this here. Drag this down. And then we have 4, 6, 8. This is N1. 468. Turn it red because it's coming from the puts, negative gamma, N1. Then let's plot our absolute gamma strike, 470. Duplicate this, drag this right here, change the color, change the title. It is AG, absolute gamma. make this purple here. Boom. So now I know where there's a lot of liquidity for this week right now. Then let's plot our open interest levels. So we have our call open interest strike is at 480. So let's duplicate that, edit. This one will be 480. This is our call open interest, and let's let it plop it right up there. Now let's look at our highest negative gam, our highest put open interest strike. That would be also 468. So then we'll just come here, edit it, give it a plus. So that way we know it's also the put open interest. Have it saved there. Let's see what other significant levels we can plot our chart. This is our gamma flip strike. So that's 466. Duplicate, edit. This is our G flip, 466. This level will change throughout the week. Just make it dash there. Actually, I use the lighter gray so it stands out a little bit more. There we go. All right, and then from there start plotting our high open interest level. So we see that this is the highest open interest strike at 480. So I'm going to call that the HOI, high open interest. Boom, on the chart. To make it stand out, I want to draw a bluish level around it because that's what I generally use for signifying open interest. Make sure this is not as significant here because I want to give it a little bit of a range, but I'm just cleaning it up a little bit. Make sure this ends at the end of this week here so it extends out. That is obviously too bright. So then I just lower the opacity, bring it around 70-80% or so. We can use this one or that one, whichever one you're used to using. I alternate between the two. They do the same thing. Okay, so now I know a lot of open interest up there. And then we have a decent amount of open interest in this region. Because there are a lot, because it's all clumped up together, I'm going to be trying to, really signify, make it really as narrow as I can because I don't like too much stuff on my charts. Market just opened, so I do need to check on some 0DT positions, but I'm going to just wrap this up pretty quickly here. So we have 469 up to 470. What do we have? So 471 down to 469. So 471, 471, 469. Okay. I'll shift all these over for the reason I started here. Again, I was rushing to try to get this done pre-market as the market just opened. Let me just double check on some of my 0DTE SPX positions on my other monitor. All right, continue right along. Let's just make sure we're not missing anything down here. As we scroll down, we can see there isn't really much. But what we have right here is that below 465, the gamma exposure just falls. I call this is pretty much a cliff. When I just see one strike, if there's a buildup of gamma exposure levels and then it just drops. Again, this is pretty visual. I'm just looking at it. Nothing, scientific about here like this. This is a cliff as far as I'm concerned. Price just drops. This right here, this is our mountain. This is the cliff. Price just, gamma exposure just drops right here. I want to mark that on my chart because as we started in this video, you guys see that was the 470 strike and look at what happened. Price ended up stalling out around the that strike price here on the SPY last week. So 476. Let's duplicate that. 476 is right here. And going to call this our positive GEX cliff. Terminology that just makes sense in my mind. Again, nothing too scientific about this. The important thing is I am leaving biases out of my decision making. Whether I think the SPY is going to go up or not is not relevant. I'm just plotting, I'm converting this data that I see here directly onto my chart. And as we started in the beginning of this video, as long as the SPY is staying above 470 and these strikes here I do not really want to have some sort of a massive bearish bias. However, if we start getting below these strike prices, that's where my perception will change, or how I'm going to approach trading. As long as the trend right now, which is intact, remains to the upside, then I'm going to be slightly favoring those types of trades until it doesn't work. If you keep trying to predict when the market is going to pull back or sell off or so, you're going to find yourself to constantly be in trouble, because in this case, you guys have known from since the end of October, the market has gone straight up. If we take a look at the daily, we can see right here, the market has gone straight up. Imagine trying to predict every single time it's saying, I'm going to keep shorting, I'm going to keep shorting the market. You would have missed out on one of the largest, most historical rallies in over 50 or 60 years, if I remember correctly. Over 60 years, this is a whole annualized return. And if you're still trying to fight this, then you're missing out on understanding trading. You're trying to be some sort of a fortune teller, and that's not the type of trader you want to be. So I will continue to favor to the long side until something changes, until price action starts closing below significant levels. And the significant levels is the point of why we're plotting these on our charts right now. If the SPY starts closing below here, that's when I will start reading that as a sign or a clue. Hey, something is changing. Even now, as the market has just opened, we have some sort of a downtrend that has now broken here. So there's potential opportunity for momentum to the upside for this week. If we start getting back below these levels, that will change. But for now, I'm going to have some sort of a bullish bias. I have a 0 DTR and Condor that might be in a little bit of trouble if we were to get above this level here. But for now, I can continue to record this video as I don't need to make any adjustments as of yet. To conclude this, let's draw 465. Let's put that is our negative gamma cliff. And not every expiration or every time we do this do we see these types of levels. It changes sometimes. Sometimes there isn't a cliff. Sometimes it's more muted. Sometimes it's pretty flat overall. Sometimes it's just one dominant strike that really sticks out. So it's different every time. This is our roll off right here. So I'm not going to bother putting this off, as I know below this cliff here, there isn't really anything happening. And then in this case here, we can see that there is a little bit of a roll off here until we get to this strike price. But we already have this marked on our chart. In between here, it is pretty flat. So it would not be surprising if price action did get above this. If it did hold and there was some sort of a bull flag that formed here, I would probably expect price action to continue up to this high liquidity region here. But for the most part, I'm going to wrap this up here and just zoom out so you guys can see. This is my blueprints on my roadmap, if you will, for the week. I'm just gonna, before I share this in the QTA Discord, I'm just gonna just shift everything over so it lines up pretty nicely right here. And my final thoughts or comments on it might be, if we scroll down, I always like to plot a little bit more of the other absolute gamma strikes. So we can see 470 is where all the absolute gamma is, but then we also have this as number 2, so this is 469. So it's pretty close. I don't like when they're that close to each other, as I've been mentioning in some of the previous week's videos, but let me just put it on this chart anyway, 469. And then I'm just going to make this one dash because it is not as significant as the main AG strike. And then this is AG2, just means it is the strike with the second highest gamma exposure. And then this is AG3, so 471. I'm going to plot that on the chart. And what do we know? It also coincides with our high open interest, the blue box that we drew on the chart, 471. Boom, there we go. So this is AG3. So I definitely know this is the area with a lot of liquidity, just like last week. If the SPY is holding above this region, then I'm going to continue to favor targeting 475. However, if the SPY starts getting below this region here, I understand that there is potentially a lot of support down at these levels. But if these levels do not hold, that is when my bias will change for the short-term foreseeable future, and I will make adjustments based on that. So I might start selling call credit spreads. I might run some out of the money long put butterfly spreads. I might enter in some out of the money counter spreads. There will be a different type of approach in which I will run, and then my stop loss will be above 471, because if the SPY was to get below here and then get back above 471, that invalidates this short bias or this short thesis. So that is the unbiased approach that I like to have for the market. markets, and these are the levels providing some sort of a target for myself, as well as allowing me to understand from a non-discretionary standpoint, where is there likely to be support, where do I want to have a bullish bias, where do I want to have a bearish bias, where do I potentially not want to have any type of directional bias at all, maybe run iron condors in this region here, maybe run at the money iron flies. Guys, if you've been enjoying these videos here every week, let me know. I don't know if I'm going to continue doing them into 2024. This is just something to help jumpstart some of you guys that have been confused a little bit with the gamma exposure, confused with some of the levels that I've been sharing. And at this point, it should be starting to really cement or really stick. Again, just always observe the previous week. Take a look at this. You guys can see price action held above the blue and the purple. We ended up heading towards the green. If it's as simple as that to you to understand the colors, use that approach. You want to simplify the trading to allow your mind to focus on your risk management, the type of spreads you want to run, taking more of a portfolio manager type of standpoint for your trading. There are multiple videos at this point on this YouTube channel discussing or showcasing this, or review the previous videos. The reason I put the dates in these videos is so that you guys can always go back and see exactly what happened. You guys can compare what was discussed at the beginning of the week, how did the week actually play out, because that's the best way to learn. Review what actually happened. The same way if you're an athlete, you're going to more than likely review your footage. How is your gameplay? And that's what's going to help you improve. Your coach is going to have remarks for you. They're going to have some sort of feedback on what you should do, and you should be doing the same thing for your trading. Thanks for watching, guys, and let me know if you enjoyed it down below. See you on the next one.